Hello and welcome to the second quarter 2022 review. The markets have been very volatile, to say the year. For the first part of this year, we're down almost over 20% in most major indices, with growth type stocks being down over 30%, and value stocks being down a lot less, around 10%. I'm doing this a little bit earlier, so I don't have official economic data, but the markets and media have been talking a lot about the potential for a recession. A recession is traditionally defined as 2 quarters of negative economic growth. So that's important to note, because by the time this is out, we may have the data, and they may have called for an official recession. Bear in mind, they do have a little bit of leeway. Even if we do hit 2 quarters of negative economic growth, they might not officially call it. Just know that no matter what happens, if a recession is officially called, you will see it. It's very likely you will see it down in the markets. We're already down quite a bit, and you'll see further declines. As for what the markets look like right now, there's a lot of areas that a lot of analysts have the consensus that it's oversold, that it's undervalued, and they're starting to come, even in large names, there's starting to come a lot of opportunity, and that's where you'll find a lot of fund managers and portfolio managers who have been collecting cash will start to redeploy capital into them areas.
So I just wanted to make a quick note. A lot's changed since I recorded this video. So the Bank of Canada increased interest rates by an entire %. That's the most they've increased in a very, very long time. So interest rates are now sitting for the overnight rate about 2.5%. It is popular consensus is going to pass 3%. So still expecting more interest rates. As we all know, when interest rates go up, bond prices come down. So you're going to see a further negative impact on the markets. We're going to see slower earnings. We're going to see all this as it comes out. We still don't know whether we're going to hit an official recession yet, but it's looking more and more likely. And then on the other side of things, we have the most recent inflation numbers come out. I wanted to make something very clear. So you're going to see all sorts of numbers, 9%, 7% for the US, Canada. These inflation rates are not what happened last quarter. They annualize the rate. So if what happened last quarter happens every quarter, then inflation would be up 9%. It did not go up 9% last quarter. Just want to make that super clear. The way the media portrays it is that it went up 9% last quarter. That is not true. That'd be insane. No, it's if what happened last quarter happens every quarter, then it will be up that amount. Just wanted to make that known. Anyway, we'll go back to the video.
I want to do something a little bit different with this review and really talk about why I am still so optimistic about the future for the economy and for Canada, for North America in general. And there's been a lot of comparisons to 1970s and 1980s when we had the inflation run, and this is different. There's definitely, I understand why the comparisons are made, but this is definitely a different type of situation. And we'll talk about that. So let's talk about a major one of those things is going to be oil. We've seen a lot how it's affected oil prices. The oil price increases are very different from then. Back then, a lot of it was caused by actual issues. A lot of the cheap oil was no longer available compared to today. A lot of that pricing issue, especially in Europe, is caused by everything going on with Russia currently. And it's expected that as we continue down this path, the impact of that will actually lessen, not increase, because we have other sources. We will see potentially a lot of Canadian, North American companies increase their oil output and things like that, and that's already happening. And what that will do is hopefully that will bring the price of these type of resources back down. It seems to be that a good place for oil to sit is around that $50 to $60 mark. And a lot of the forecasts show, 2024, 2025, the expectation for it to go back to a more normal range. Another reason I'm optimistic is because of the current supply chain issues. It's very likely that as we go throughout the next few years, a lot of these supply chain issues will get resolved and hopefully get to a point of pre-COVID, where the supply chains were good and we didn't have all these issues that we're facing now. And supply chain issues are a major thing that's currently affecting inflation. When the simple laws of supply and demand apply here, and when something is harder to get hold of and there's less of it, the price goes up. And so as these type of worries and concerns ease and these supply chain issues get ironed out over the next few years, it's very likely that alone will have a lot of de-inflationary impact. Another thing that gives me a lot of comfort is that we are not traders. We're long-term investors. So when you have these type of events that affect the market broadly, it's always has been an extremely opportunistic time to be buying. We know that even with inflation, the type of companies you want to be in, very large companies, have strong balance sheets, and down the line can definitely pass on the cost of their increases to the end user, which sucks for us, but it's good for companies that have the ability to do that. And that is the vast majority of the portfolios that I put together, these type of companies that do have that ability to increase prices. Think of companies like Walmart. We're still going to buy milk, even if it's 50 cents more. We're going to complain about it, but we still have to buy the everyday necessities. And these type of companies, I wouldn't say do well in an inflationary environment, but they aren't going anywhere in an inflationary environment. Okay, so that's part of the reasons I'm pretty optimistic. What would change my opinion? The biggest one would have to be people's viewpoint of inflation. Currently, we all expect inflation to come back down to a more normalized level. That's the consensus. So we think that 2022 is going to be a really high year for inflation. We already see the data showing that. So 2023, 2024, 2025 look to be more normalized years. Maybe even a lot of de-inflationary pressure in a lot of areas. So that would be a big positive. But what could unravel all of that is if we now start expecting every year to be 6, 7, 8% inflation, which is what happened in the 70s, where now workers are now demanding them type of raises. Companies are preemptively increasing their prices by 7% a year. And what ends up happening is this self-fulfilling prophecy. We expect high inflation, we prepare for high inflation, so high inflation is here. And that is a lot harder to deal with than the current issues. And I say harder, they managed to do it. Yes, it sucked. Unemployment jumped to crazy high numbers, and it was rough. But that's kind of worst case scenario. And even in that scenario, I mean, the stock market back then was worth about, I think it was $1.5 billion, and now it's worth like $50 trillion. So a lot of value was still added, in the following years. Why would it be any different this time? But hopefully that doesn't happen, and the interest rate hikes that we're experiencing do the job to calm a lot of that fears, and really hopefully we start to see some positive news out of inflationary numbers in the near term. That being said, the full impact of the rate increases are not going to be felt until almost next year. This is exactly the same thing with COVID, when kind of was put into this situation and all the stimulus and everything, we knew we would not feel the true impact of those actions for years to come. So whenever you hear the media talking and they're saying this is what's going to happen, nobody has a clue. We don't know until we're in it. And then when you look back, you can say, yes, this was a result of this, and this is what happened. But in our current situation, that's part of the reason why there's so much uncertainty, is because we don't know. As soon as there is some level of certainty, you see the markets like certainty. So we typically see around areas, even if we knew, inflation is going to be X amount for the next 3 years, GDP growth is going to be X amount for the next 3 years, you would see the markets react positively to that, because then we have some certainty. That's not real life, though. We don't have that certainty, so we're going to continue to experience volatility. I think for at least this year and potentially next year, really depending on the numbers that we hear back from inflation. It doesn't really have much to do with how the companies are performing. It's very expected that as interest rates go up, companies are going to have less profits. That's well documented. That's why they're doing it. But it doesn't make the markets any less volatile. So in total, how does this affect us? How does this affect what we're doing on a daily basis? As a more long-term investor, it doesn't make any real difference. In fact, it should be something that, as long as we know that we're secure in our own day-to-day lives, we have our emergency savings in place, and we've done what we can to control things in our lives, then we do what we should be doing, and we put money through, and we view this as an opportunity. For those people that are not in that situation and you may be relying on this as income, that's why we plan for this. We plan for this as if this is going to happen every year. It's a fact that these type of events will happen, and they do happen. This will not be the last one, and it isn't the first one. It will happen again, and that's why we make sure that we have the cash available. So if you're pulling money out to live on, again, we're okay. So the theme is basically we wait. We continue to do what we've been doing with optimism that these issues are temporary, and until we know any different, that's how we proceed. We proceed based on the idea that these inflation will return back to normal, supply chain issues will eventually be resolved, the economy will eventually get back to a growth type environment as it always has done, and we will look at this and we'll learn from it for next time, just as we have all previous market declines. If you have any questions, as always, let me know. Reach out to me. I know this can be a very trying time for a lot of people, so please don't feel like you have nobody to talk to. Reach out to me and we can discuss exactly how it relates to your personal circumstances. Thanks for watching, and I'll see you later.